Hi, this is Dan Gibby, Chief Option Strategist at MasterTrader.com, and I'm going to give you a quick, very valuable, priceless lesson on how to properly trade volatility products. The VXX, we're looking at a daily chart right here, is an ETF. You cannot trade the VIX, the SIBO Volatility Index. That's just a mathematical formula that measures future implied volatilities of the S&P 500. You can trade the VIX futures, you can trade VIX options, you can trade the VXX and other levered volatility ETFs. But the ETF fund manager must buy and sell VIX futures to make this product tradable to the public, like you and me. Volatility, as you know, is like a fear index. When volatility rises, fear is increasing, people are rushing to the markets to buy protection in fear of a market downside. So that's when volatility skyrockets to the upside. But you have to be extremely careful when you buy volatility, because 90% of the time, because of how these products are made, constructed, they have what's called Contango, meaning the fund manager has to continuously buy and roll futures VIX contracts into more expensive ones, which puts downward pressure on the value of the portfolio. So that's downward pressure on this thing. So MasterTrader prefers shorting volatility using the charts of both the VXX and the spiders for our timing. Now, I had a email yesterday saying, "Hey Dan, I saw one of your videos on YouTube, and is this a good time to buy volatility because it broke out the other day and we have a pullback, and yesterday it gapped over the high?" And I said, absolutely not. And he says, well, you know, there's these hedge funds, newsletters, everybody's saying the volatility is too low. Look how low it is. And so it has to go up. That is an incorrect statement. This has the headwinds. Even if the VIX is on major support and goes sideways for months or years, this VXX ETFs will continue to drift downward. If you look at a weekly and monthly chart, you will see that. Continuous headwinds are pushing this lower. You always have to time it with the spiders. Now, the spiders had a 7-8 day pullback to minor support right there. We had a 3-bar reversal. There's the rising 20 period moving average here, a big engulfing bar, and this is not the time to short volatility. To buy volatility. You only buy volatility when you have two things: a bullish pattern on the product that you want to trade, futures or ETFs, and then you have to time it with a bearish entry in the SPY, the S&P 500 ETF. So this was a breakout bar failure here in January, bearish gap down, topping tail, couldn't bounce. So both on the gap down day and this continuation breakdown, that was your time to buy volatility. This might have been a time, this might have been a time, this might have been a time to sell volatility at the lows. Let's go back to VXX. Another newsletter somebody sent me recently said, you never want to try to short the front month volatility because that has the highest risk. MasterTrader 100% disagrees with that statement. We want to sell volatility when it gets very high. This actually puts the term structure in what we call backwardation. What that means is the front month volatility futures are much more expensive because we are in the middle of a panic right now. But the subsequent longer dated VIX futures are pricing in normality, so they're lower. So every one of these spikes has a tremendous opportunity to short volatility because of the mean reversion nature of volatility, and particularly these volatility ETFs that have 90% of the headwinds from Contango. So in summary, the master trader strategy is to short options on these volatility ETFs, the VXX and the UVXY, timed with a bearish entry on the spiders. And we only would buy volatility, and these are short-term trades. You have to get on and off as soon as you get any type of slowing momentum or reversal on the spiders, get off it. So now you can see why I vehemently said we do not recommend buying volatility yesterday, even though it's on support, because you did not get the trigger on the spider bearish pattern. Secondly, another subscriber sent me a newsletter study saying, hey, every time volatility spikes, we should sell iron condors. And we vehemently disagree with that. And let me conclude by explaining that. So at those spikes in volatility are corresponding with bottoms, short-term oversold bottoms on the spiders. In the Master Trader Advisory Letters in our green trading room, we were cleaning up shop, selling expensive out-of-the-money put spreads on the spiders, on this February bottom, on this March, early April bottom, on this May higher low retest, on this July bottom. These are all opportunities to create tremendous income and wealth if you know what you're doing. So would I be selling an iron condor on these bullish reversals? No, absolutely not. I am only selling the out-of-the-money bull put credit spreads. What an iron condor is selling an out-of-the-money bull put credit spread plus an out-of-the-money bear call credit spread. That is not the time to sell volatility expecting range bound. It is a time to sell volatility, but just on the bullish put spreads on the spiders or any other stock that you find a similar setup, because if the VXX is that high, then the volatility is going to be spiked on these stocks across the board. I hope that helps. I have been trading volatility for a decade. I actually worked with a volatility hedge fund. There is so much, excuse my reference, misleading junk that's taught out there about how to trade volatility. Even as a so-called famous option trader has a volatility capture program. And I saw an email that just came across. They're negative on the year. Their mechanical approach to it without using charts is not working for them either. You must use the charts as I just explained. I have put together a phenomenal course on trading volatility. Just go to mastertrader.com under the Education tab. Ultimate Guide to Trading Volatility ETFs. It's an online 4-hour course, 65 slides. This is what you need if you want to intelligently trade volatility products and other ETFs. Happy trading. Don't forget to subscribe to the Master Trader YouTube channel if you would like to continue to receive valuable information on investing and trading in the markets. Good trading, and see you next time.